Hello and welcome everybody. This is Cheston with By the Books Consulting. And I had a client last week. He has a customer that he didn't want to charge sales tax to. It's sort of like a promotional thing for him, like in the first portion of the relationship. He said that he'll cover the sales tax. And he wasn't sure how to do that in QuickBooks and provide a receipt for the customer that would indicate all of that. So I showed him how to do that, and I figured since he needed the help learning how to do that, somebody else might want to know how to do that. All right, and so my goal of this video is to have you feeling like an accounting beast after this little trick, this little advanced concept here with creating these types of transactions so that you can handle these aspects of business that really do come about in the day-to-day activity of your business. All right. So here's how we're going to solve this issue. So the goal is to not charge the customer sales tax, but make sure that you're still accounting for it so that your agency, your state, and everybody gets paid the taxes and everything. And the company, your company, is going to be the one who incurs the expense instead of the customer. All right. So that's the goal. And that happens for a couple of reasons. The reason is, one is just like how I said with the customer, my client, how you just didn't want to charge the customer tax for a promotional thing. The reason is you may have just forgot the first time around to charge sales tax, and you need to make it up and account for it now to make sure that the sales tax agency is getting what they're due, so that you're not out of compliance with that. Okay, and some of the times we feel as though we don't want to charge the customer in hindsight and like in retrospect after the fact that that extra sales tax after the transaction has already been said and done. So it's something that you can do internally that really doesn't impact them, and you do incur the cost as a company. Okay, so that's the purpose of this video, is to show you how to do those things real quick and easy in QuickBooks. You can actually do it in whatever accounting software that you use. You just really need to understand the principle and the concept behind creating the type of transaction. All right, so here we go. We're going to create a new sales receipt. You could do this with an invoice as well, but we're going to do a sales receipt here. All right. So we're going to choose our customer, and we're going to choose the product that was taxable, that we sold the customer, or that we are selling the customer. So this is going to be an example that we're not going to charge the customer sales tax. We're going to pay for it ourselves. All right. So this is what that looks like. We choose our product, and whatever pricing and quantity we're going to do. Let's say we're doing rocks, 100 pounds of it, and we're doing it $7.99 a pound. Right. So this is what it would look like to the customer right offhand. All right. So the $7.99 is a subtotal, and this is what they would pay inclusive of all taxes. But this is not what we want. We want them to just pay the $7.99, and we want to pay the tax. So in order to do that, we're going to come here to the next line, and we're going to add a new product here to this line, a new product or service item. Now, QuickBooks allows you to do it directly from the sales form. I'm aware that not all software allows you to do this, but it's a pretty good function here with QuickBooks. If you do not have this function in your software, you need to create this outside of the form first before you're able to do this. All right. So here we can do it directly on the form. We're going to add a new product or service. And the type of product or service we're going to add is either going to be non-inventory product or just a basic service. I'm going to choose service. And we're going to name this a company paid sales tax. You don't need to put a SKU number in here, or you don't need to assign a category. We don't need to assign a category either. We don't necessarily have to add a description, but it's helpful. So I'm going to add the description. It's going to pretty much be the same as the name of the service item. We're not going to give it any rate right now. The important part of this addition is to make sure that it is mapped correctly. We want to map this to our tax expenses. All right. And typically what I would do is have another chart of account listing for sales tax paid or taxes paid to get more detailed and granular with reporting. Kind of block that out and let me know exactly what portion of the taxes were actually sales tax. That's just me. But taxes and licenses is okay to do. We can also do other things in order to track it and make sure the reporting is good to go to understand where our sales taxes are going from. All right, so the next part of this is we want to make sure that this is a non-taxable item. All right, so that's the next and last phase of this. All right, and then you're going to hit save and close. And look at that, it added it to our line on our form. And here, the goal is to have the amount of the taxes, sales taxes, be deferred to the company. And we do that by adding a negative in the amount of the taxes that are on the form. So we have $63.92 in the amount of sales tax that's due. So on this line item, we're going to put a negative $63.92. And what that does is take the actual sales tax amount and remove it from the customer and push it to us, the owner, the business owner, or the business itself. Okay, so you can see that here. So the amount that we want to charge them is just the actual subtotal rate. The subtotal here does change on the form, but the total amount is what we want. It's $7.99 is what they're going to pay for this product. Okay. So what about the situation that you just plain forgot to charge sales tax? And you don't want to burden the client with it. You figure look, what's done is done. We'll just eat the cost of, the sales tax expense. We just want to make sure that we're compliant with our agency, our state filings and our local filings with taxes. Okay, so good. So it's not too dissimilar from this. It's almost the same thing. The only difference here is that you added another line to zero out this transaction. So in order to have you understand a little bit about why we do that, is we have already done a transaction and sold this. Let's say we've already sold them $799 worth of product, but we didn't tax it. They just paid $799, and now it wasn't accounted for in our system that there was tax associated with it. For example, here in QuickBooks, this box here is checked to charge tax. But what if you didn't check that box before, and you only charged the $799 and never did create the account that's due for sales tax? Well, this is what that looks like. You're still going to add this second line here to have the tax paid by the company. But since we've already done this transaction, we're not really selling them another 100 pounds of rocks. So we got to make sure that we negate that transaction here, all right? So that our inventory records are not understated, and our income is not overstated. Our sales are not overstated, okay? So we're going to add that same item that we used in the beginning, that rocks, same quantity. Same amount, $7.99. And the only difference here is that, I'm sorry, we're going to actually make this a minus 100. That's what we need to do, make it just negative 100. All right, so that negates this part of the sale, right? So we're not really selling any garden rocks. We're just creating a transaction to account for the taxes. The last part of this is we want to uncheck this box, right? Because this last part is just to really account for our sales and inventory. This is no longer to account for the taxes. It's just for making sure that our sales and our inventory are accurately reflected, not understated or overstated. All right, it has nothing to do with taxes. This is just to make sure that we're not duplicating any sales. Okay, hopefully that makes sense to you. All right, so now what happened was we have a $0 transaction, which is fine. We're just billing ourselves for the taxes, handling the taxes ourselves. Now, if you were going to charge the customer sales tax for this transaction, let's say you decided, hey, look, I'm not going to eat this cost. I'm not going to have myself pay for the customer sales tax. I'm going to get this invoice over to them, let them know that they forgot to pay sales tax on it, and they're just going to get this. The only thing you would do here is remove this line item, and then the bill would be $63.92. It would just be a sales tax bill. So that's what you would do. So if you come there and click on that second line item and just made sure that the first item is checked for sales tax, and then we zero out the actual amount that is being sold again, then the bill will just be for the sales tax amount. All right, hopefully that's clear, guys. This concept, if you get it, it's very helpful in these little like transactions where sales tax comes into play. I know a lot of us deal with it. Sales tax is very important to understand, and this does happen. When we forget to charge sales tax, or we want to make sure that we're promoting our pricing strategies in a way where we can not charge the customer sales tax. So this is a very helpful workaround, a helpful tip on how to do that. No matter what platform you're using, no matter what software you're using, just need to understand the concept. All right, if you have any questions about this, you can always leave a comment in the comment section below. I'm also leaving some detailed contact details in the description below so that you can get in contact with me if you have any specific questions about it. But other than that, I appreciate you watching, guys, and hopefully this helped. All right, and now you can be an accounting beast with what you know. Well, take care, guys. Like the video, subscribe for more content, and I will see you in the next video.